Hello everyone and welcome to today's Strategy of the Day update. I'm Dan Hussey with Zaner Ag Hedge. It is January 9th, 2020. It's been quite the week for the markets. The ag markets have been actually quite quiet, but everything else, gold, energies, anything tied to a risk on or off type profile has been volatile. We've seen new highs in the stock market followed by pretty precipitous sell-offs, record runs in gold and silver, into new multi-week highs, only to be found by pullbacks there as well. But coming back to the grains for market. Oh, and before we begin, remember trading futures involves risk and is not suitable for all investors. Again, my name is Dan Hussey with Zaner Ag Hedge. And the March 20 beans, which is where I want to begin things today, because we actually started the day a lot stronger in the grain markets, with the exception of wheat, which did finish with a nice run into the close. Both corn and beans backed off of their highs of the day, trading to a 387 high in the March 20 corn. That broke out of highs of yesterday, which was a technical, reversal type pattern that you look for in a market. Unfortunately, we did find resistance right into the 387, full 50% retracement off the high, as well as, you can consider this the prior lows around between 386 and 388 that were supporting the market for the last week or so, that we now finally came back below. I talked about the 381 area pretty extensively in past videos. It's both full 50% retracement from the 371 December lows to the November 392 WASD highs, as well as a gap fill from back on December 13th, that would fill and bring a nice technical close to an open area in the market. A lot of people are would be concerned about if the market continued to run with that open gap below us. Not much else to say about corn other than we have a lot of news tomorrow that could affect this market. We have USDA WASD supply and demand estimates out at 11 a.m. Central. We also have the crop production, but most importantly, quarterly grain stocks I think might be one of the big surprisers and movers tomorrow, particularly for the corn market. We haven't seen the reductions on balance sheets or any kind of change in production in corn like we saw in beans in earlier reports. We are anticipating a slightly lower production number, dropping yield by about 3 bushels. Actually, more like just over 2 bushels, I should say, on average. And the quarterly grain stocks number expecting, about half a million bushel reduction there as well. From the 11,937. Well, that's 11.9 million expected bushels from the December 2018 report. Quarterly report, we're expecting that to be dropped just a bit. So moving on to the soybean market, probably the most saddening day of all the grains today, but really just a range between the 960 high and the 940 level that I've been talking about in my last write-ups and videos. That range continues to play out. We saw a strong open in the overnight session that took us up into new overnight highs. We closed the biscuit rather strong up around 950, but then gapped lower and have left this little biscuit open gap and day open gap on the chart that I would not be surprised to see tonight or even into tomorrow's news report. Potentially the market rally back up to close that gap and still be in a bit of a range between 954 and 940. But anything to the upside, if we start to break through 960, there's not much in the way up into 980 to $10 for the soybeans. So keep an eye out for potential breakouts with the WASD and news events tomorrow. And again, soybeans have simply broken out in early January, started to flag and some sideways structure here between 960 and 940, breaking out above the resistance we held into the end of the year. Not much has changed here today, just some sideways price action that we really were otherwise anticipating inside of a range. Wheat has had a stronger start to the week than the other grains. We are trading back up towards the 560 high here into the end of the day. And today's close for Chicago wheat reminds me kind of what we're seeing in the soybean market, where we've got this 20-cent range at highs that we've started to trade back up and retest the highs of. We've broken above potential resistance zones from the 545 to 540 area that were from October, November highs, as well as this trend line resistance. If you take a much larger step back on wheat, you can see that trend line coming down that we've broken above, now tested as support and continue to hold. Upside on the Chicago wheat could take us, up towards that 580 area and a retest of that summertime high, which would probably correlate with, maybe a move in the beans above 960 if all the grains are moving together. Lots of news tomorrow that could be affecting those. Real quick in the cattle, or let's start with lean hogs. Lean hogs had another softer day of trading back down to the 66.97 close, and really retesting that 66 handle in the February lean hogs. We have a very sideways market here, trying to carve out maybe a longer term low. I would not be surprised to see a push below these lows though, and a move down towards 62 to 60 if the downtrend is going to continue. If we do see a bottom form into the 66 area, we'll probably just go back to retest the 72 highs of the range that we've been in. And it would take a lot more for this market to get back up to 80. And at this point, even with phase one deals, with China being signed and other things, it's surprising still to see our lean hog prices under so much pressure, but you can't argue with the market. And last but not least today, live cattle and feeder cattle find themselves really trading sideways since coming back up to prior highs. We've got February live cattle in a penny range between 126 and 127. I see this as a flag-like structure against the highs, and ultimately we're still in a 124 to 127 range in this market, and seasonally should be for another couple months, usually into the new year. That you get this sideways to up like price action, or really just whatever direction live cattle happen to be moving into the end of the year, it sometimes has this end of year range. And then last but not least today, the feeder cattle coming right back up to try to bang this 148 November high. We're holding on to gains here in this market and trendline support certainly. We break out above 148, onwards and upwards towards 150 and 152 in the near term. But if we do start to break down, there's a little bit of a trend line here. We get below today's low at 146.15, certainly below the 145.25 lows from Wednesday. Expect a little bit of a deeper pullback, and maybe even for this market to be trading back in its range towards 142 or 140. But at this time, sideways to up for the cattle complex. Hogs look a little bit softer on trade, and the grain markets look a little sideways to up at this time, and holding on to some of the gains that we've seen over the last couple weeks. So with that being said, have a great day, everybody. I'll be back with you as price action develops. My name's Dan Hussey with Zaner Ag Hedge. Find me on Facebook and Twitter at Daniel M. Hussey, or Daniel Hussey Jr. on Twitter, and Daniel Hussey on Facebook. My number 312-277-0110. That's 312-277-0110. Have a great day, everybody, and be back with you as price action develops.